Welcome to the Cumbria Chamber of Commerce podcast, your regular update of business news and issues from around Cumbria. Find out how we support new business and help existing businesses to grow and flourish at cumbriachamber.co.uk. Now here's the Chamber's Business Engagement Manager, Julian Whittle, with the latest episode.
Hello, I'm here with Rob Johnston, the Chief Executive of Cumbria Chamber of Commerce, and Graham Poles, a tax partner with Cumbrian accountancy firm Armstrong Watson, and we're here to discuss the budget. Well, I think, gents, welcome. I think we can start with coronavirus because that's how the Chancellor started his own speech. It is the issue of the moment. He's done quite a lot, hasn't he, Graham, to help businesses mitigate the impact of this?
He has. I mean, as you say, Julian, it was the main focus of the first part of his speech, and as had already been trailed, the SSP that people can claim statutory sick pay. Yeah. Absolutely. People who used to have to wait till day 4 of being ill before they could claim it if you were an employee. And what he did with that is he's brought it in so you can now claim that immediately. Obviously, that's a cost for business. So the other part of this was that he is now going to ask the government to refund up to those 14 days, that self-isolation period people have been talking about, back to the business.
For SMEs, not for everybody.
So you've got to have fewer than 250 employees for that to be in play. And I'm guessing they'll do that through your normal pay-as-you-earn check. The other way that he's trying to help, because obviously there was a lot of talk about the self-employed, is they don't qualify obviously for SSP. So he's looking at how they can start to claim for benefits and reducing things like the universal tax credit caps to try and allow them to claim the benefits a bit quicker and again from day one.
And there's also, you also mentioned time to pay, which is an existing scheme that allowed businesses with cash flow difficulties to delay tax payments. So presumably this will be a legitimate reason for you to turn around to HMRC and say, can I delay my tax payments? Can I stage them? There were also business interruption loans as well, up to 1.2 million, I think, which are going to be 80% underwritten by government. I'm presuming they will come through banks, but just with a government guarantee sitting underneath so that the banks will lend. Yeah,
I think that's right. The other thing that was announced is that the Bank of England have released some of these other elements. They have to have a certain amount of liquidity, and they released the cyclical part of that, which gives the bank more liquidity to lend out to small businesses. So again, that law will be helpful, given that it'll probably be the smaller businesses that will suffer the most because of the cash flow impact it's going to have on them, I guess.
I think there's some grants as well, aren't there, for very small businesses. If you're eligible for small business rates relief, you can get a grant up to 3,000. And a lot of businesses, there's going to be a 1-year business rate holiday, effectively, for businesses with a rateable value under 51k that are in retail, hospitality and leisure.
That's right.
And obviously a lot of those a lot of Cumbria businesses will fall into that category.
They absolutely will. And as you say, for the next year, they won't pay any rates whatsoever at all. But of course, if you benefited from the small business rates relief, you wouldn't have seen any benefit from that anyway. You wouldn't have been paying any rates. Yeah. So they've introduced this cash grant of £3,000 to try and help them through, to give them something back.
So, Rob, what's your overall take on this package of coronavirus measures?
I think it's particularly good for Cumbria, Julian. I think if I wasn't an SME, I'd be somewhat disappointed with this package, to be perfectly frank. But an SME that is in the retail, hospitality and leisure business, it was almost custom designed for. So I think we've got to be very thankful of that, really. I think also the fact that some of the figures we've been using on projections of worst case scenario around coronavirus being about 20% of the workforce.
Off at any one time.
I think this starts to tackle that in I guess as good a way as they can. You've got to remember it's very difficult for government to directly inject money into businesses. It can do a certain number of things. It can defer any payments. And which is effectively what they're doing here, and a bit of support around the SSP, as we mentioned earlier. But I think, on the coronavirus issue, I think Cumbria has done rather well with this budget.
I mean, the sense I get from talking to businesses, at least within the early days, I think, of this outbreak, but the big worry is cash flow. Because if possibly their customers are not spending money, a lot of retail and hospitality businesses, that's the case.
And I think that's where the bank loan, the business interruption loan, is an interesting one.
Yeah.
The real challenge with all of this is what bureaucracy sits between the promise today by the Chancellor. We know this from a lot of schemes they've run in the past, is that there are good stories, and then the bureaucracy moves in and it gets very difficult. I just hope that, and that's what we'll try and do, obviously, as chambers and other business organisations will hold their feet to the coals on this and make sure it gets flowing. But I think that loan and the terms around the business interruption loans will make a lot of difference to a lot of businesses.
Okay. Well, we move on from coronavirus. I mean, it's quite. We almost forgot about this with the budget, but of course the Bank of England cut the base rate this morning by 0.5%, down to 0.25%, which doesn't give a lot of room for manoeuvre if they need to further stimulus down the line. Now, interestingly, the Chancellor, when he got to quote the Office for Budget Responsibility forecast, he sort of caveated that by saying, well, these were drawn up before we understood what coronavirus was going to do, so they're probably not worth the paper they're written on, really. But I mean, he's still talking. I mean, the British Chambers of Commerce predicted last year that we'd only see growth of 1% this year. The OBR saying 1.1, rising to 1.8 next year, and then about 1.3 to 1.5 over the next 3 years. But I say that's pre-coronavirus. And inflation rising from 1.4% up to the government's target of 2% over the next couple of years. So slow growth, but given coronavirus, presumably
it depends on the blip, Julian. Right? It depends on the blip, because the reason this is not like a recession, although we may go into a recession.
Well, I was going to say, are we going to have a recession? What do you
There's a very good chance. I mean, my guess is if this is handled well and it moves out of the system very quickly, then what you'll see is a cash flow scenario, and a lot of the demand will return back end of the year. There's a lot of pausing of demand. It's slightly more difficult for those who sell time, like a visitor economy. But in terms of manufacturing, normal product flow, my guess is we'll return. And actually, the demand tends to not go away. That really predicates on the fact that it's a short blip, and by sort of midsummer to late summer, the economy is coming back. On the particular point of the bank rate cut, that really doesn't pass through to most businesses. It's a play for the markets to a degree. It's a play to say we've done the one thing that we can do as a bank is do something to say we are concerned and we're showing concern. And it's had a bit of an effect. It's had more effect than the Fed. It had zero effect at all.
Last week, yep.
So I guess that we've seen as the response within an hour this morning was about 1.5% back up on the FTSE. So that was good. So it's all the little bits that are having impact. But the big issue is going to be is how long we've got the disruption for. And that will affect the recovery.
I suppose depending on the type of business that you are, if you're a restaurant, that meal that's gone, that someone hasn't come out for, has gone forever, as it were. So for them, there will be a greater cash flow impact than say, supply chain type businesses where there is still that onward supply of goods. It just might be that your supply chain is affected somewhere, and so it slows down the production. Your staff aren't in. We keep talking about that 20%. So, it depends how long the blip is and how quickly we start to come out of it.
Okay. We can move on to tax, which is obviously your forte, Graham. I mean, it's quite interesting what he didn't do. I mean, there was no change to corporation tax. There was no change to income tax. There was no change to VAT. The national insurance earnings thresholds, right? But that was we already knew about that anyway. Fuel duty, no increase in that. Alcohol duty is frozen, so that's quite interesting. One thing that I remember being a lot of speculation before the budget was that he was going to do away with entrepreneurs' relief. He hasn't done that, has he? But explain what he has done, Graham.
So entrepreneurs' relief is a relief that you claim when you come to sell your business. You can get it in certain other circumstances as well, and I'm quite interested to see whether he's affected those other circumstances. The detail isn't fully out yet, well, certainly at the time of this podcast. So it'd be interesting to look at that. Entrepreneurs Relief, this 10% rate was available for those selling businesses up to 10 million. So it would allow you to pay £1 million worth of tax on a sale of a £10 million business. What he's done is he's brought that £10 million down to £1 million. Right. And so anything above that will then be taxed at the headline rate of corporate capital gains tax of 20%.
Right, okay.
So it's a doubling of that rate, I suppose.
The other thing that he was, or the speculation was that he might do is cap pension contributions, or the tax relief on pension contributions. What's happened there?
Well, he seems to have gone the other way on that, and he's specifically referred to that in relation to the NHS and consultants. And what he's done there is he's moved the limits, which they ran from 110,000, but basically you start to look at your income at 110,000. When you earned 150,000, your pension relief for that year, that £40,000 you could put into your pension, started to ebb away up until 210,000. Now he's increased all of those so that reduction that was from 40 down to 10,000 when you earned 210,000 has gone from 200,000. So he's increased it. So that will be useful for higher earners, I suppose, to get the tax relief. So 200,000 now, you still get £40,000 worth of pension contributions. That will start to ebb away. At that point, down to just 4,000. So there is a bit of a sting in the tail in that he's reduced it down slightly further, but that won't kick in until you get to $250,000. So he's trying to, I suppose, target the long-standing consultants in the NHS and give them some encouragement to continue to work with us, I suppose.
I think from a Cumbrian point of view, I'd be interested in Graham's take on this. I mean, the fuel duty frozen is good news.
Yeah, absolutely.
It
in this rural economy,
the alcohol duty is, I think that's a play.
Lakes Distillery will be well pleased.
But I think the fuel duty, also the employment allowance up by a third of 4K.
Yes.
I'd be interested in your take on that, Graham. I mean, what anecdotally we hear that is, for very small businesses, a real job creator because of the money it leaves in the business, and it allows the business at a very early stage to grow. But from a tax expert point of view, I'd be interested in your take on that.
I would agree with that. I mean, obviously, you've got to have the staff in the business, and assuming you've got more than £4,000 now, but it means that you're not going to have that cost, that national insurance cost that you're going to get back. It's got to be something that's going to encourage some employment, isn't it?
Yeah.
I suppose that is weighed out by something we'll come on to later, which is minimum wage, of course. So, but this certainly helps when people are looking at, should I take on another member of staff? If you've got £4,000 you know is coming back, that helps that.
And a particular stage of growth in very small businesses.
Oh, very small micro businesses.
2, 3, 4 people, it's a big issue. Yeah.
There's a few of that. I mean, R&D tax credits rising to 12% to 13%.
That's for the RDEC claims. That's for the larger businesses.
Yeah.
So.
And something I must admit I'd never heard of until the Chancellor mentioned it was the structures and buildings allowance, which is going up to 2% to 3%. What's that one, Graham? Is that?
Well, that's a relief for when you build a new building. It came in October of, was it last year, the year before? But it's only a very recent allowance. It allowed you a 2% reduction. So back when I first came into tax, there used to be an allowance, industrial buildings allowance, that gave you a 2% reduction as you built a building. This was effectively recreating that. He's now upped it to 3%, which means that you get the total cost of your building as a tax relief, so against the profits that you make, but it will still take you 33 years or so before you get the full cost of your building back. So helpful, but not a decisive change.
Okay. The relief for red diesel, he's going to abolish it rather, I think for everybody except for farmers. Is that?
Farmers and the fishing industry. So forestry could be heavily hit by that, I suppose.
Because it's off-road, isn't it? Basically,
it is. Although construction industry might be another one where they've got a lot of equipment on site.
Now you mentioned minimum wage a minute ago, Graham, and I was going to raise this one because it's something that, as a Chamber of Commerce, we've had concerns about. We've done consultations with members on this. I think it's already risen by about 25% in the last 5 years. What the Chancellor said was that he wants it by 2024, the minimum wage, or the national living wage, which is for older workers, to rise to 2/3 of median earnings. And that could mean as high as £10.50 an hour. Rob, what sort of sectors is this going to hit?
Well, it hits the heart of Cumbria, really, Julian. I think we've talked about this many times. The side, particularly hospitality, where it is very difficult to increase productivity because you're still employing people. Yeah. It's when we know we're going to be faced with a problem on recruitment. It's a disproportionate hit on those because they also have a high volume of staff in relation to the turnover as well compared to, say, a manufacturing business. So that is a concern. And to be perfectly frank, from our perspective as a chamber and in consultation with members, there's a general feeling that it's a political game. Businesses don't tend to push everybody down onto the minimum wage if they don't need to, because there's a market out there for staff, and you pay what the staff are worth. But there's a real element at the bottom end there where a lot of smaller businesses, a lot of businesses that don't have the margin, will keep people on before getting rid of them. And the danger is when you fix your staff costs at this sort of level, then the decision to not employ or to lose people is more in focus, and that's my concern. Is that an intervention in a market for labour never seems to bode well, and it's marching forward. I mean, that's a 2/3 median is and it also impacts everybody across the business, of course, because you've got to maintain your differentials. And that's the thing that actually comes out of businesses who will say, well, actually, it isn't just about keeping the bottom end down. I have to maintain the differentials, and that goes all the way to my senior managers. So the impact can be quite significant when you look at the percentage rise that is, if you have to lift that percentage rise across the company.
I suppose, Graham, retail's another sector, isn't it, that's already got its issues of its own, as it were, with online competition and what have you, and now they're facing another increased cost.
That's absolutely right, and I just echo what Rob said there, is that it is just, as soon as you start dipping into fixing it, obviously you are going to not only increase that cost, but the cost of all of your other staff. And for retail in particular, we're already talking about difficulties they're having. Yes, there's some relief around in the rates relief, but it's going to depend how many people are walking through, what sales you're making over this period, how many staff you're going to have, and then you've got this fixed cost on top of it, what you've got to pay them, because it's going up. Is it 6.2% this April? So there's already a fairly large increase coming in April. Yeah. So right smack in the middle of what is this coronavirus issue, we then got this increase in cost for businesses that are going to be quite badly affected.
No, it's got to have been a political move, this, hasn't it? When you look at the rest of the package, which is about creating stability for business, it's about putting a message out there that don't worry, your cash flow will help you where we can. And then right in the middle of this, you whack a minimum wage figure like this in. And I regard that, as I always have done with these national living wage figures, as it's about drawing in a level of the population to get the government support, and it's purely political. It's not to do with the strength of the economy at all.
We mentioned business rates. The fundamental review of business rates, which was a manifesto pledge, he did allude to that, didn't he? I think that's. Can we expect to hear something in the budget on that?
I would have thought
the next
so.
budget, rather.
Yeah, that's right. I mean, I would assume that we'll either go down to an autumn budget, which will come out sometime at the back end of this year, normally in November, and I would expect to hear something then. I mean, there was a number of other things that had sort of occurred previously on other taxes where we haven't heard anything in this budget, things like inheritance tax, where I suspect they will put out consultations, they will finally get round to looking, because small business rates has been a big problem. It's been something I've heard you guys talking about on a number of occasions, because it affects a lot of the businesses here in Cumbria. It needs to be sorted. They need to get a system.
Okay. Well, perhaps we should move on to spending, because he announced a fair bit of that, didn't he? I know, Rob, that you're particularly pleased that he said he's going to rewrite the Green Book rules on infrastructure spending. Now, explain what these are and why the existing rules are not particularly helpful for Cumbria.
Right. Well, the Green Book is effectively a rule set that the public sector use in its crudest form to evaluate a project in terms of return on investment, etc. And it has a certain set of criteria, usually financially driven and tend to be won when you're bidding for money by large centres of population, because you put a bridge over between two halves of a city that's got a lot of people and you open up lots of economic opportunity. You put a bridge somewhere in Cumbria where actually you open up a lot of opportunity as we would perceive it, but the figures behind it don't look good. So one of the reasons we've been pushing and we've been lobbying hard on this Green Book is that we believe if this government is going to deliver on its promise on infrastructure investments that are actually going to sitting some of the areas of the country away from the big schemes, like HS2 and others, then they need to change the rule set at which they're going to put the money in. And one of the things we've been saying is there needs to be another matrix in there that allows us and other areas of the country like us to bid for transformational investment that might not have the per capita return on investment that you get if you're in the middle of Manchester, for example, the middle of Liverpool. So it's quite a big win that. It is also, though, let's be perfectly frank, difficult to see how this government is going to deliver in some of the territories it's won if it doesn't change the structures of delivery.
To change the ground rules.
And that, I think, is only the first move. They really do need to put an infrastructure in place that is fit for purpose to get that money into the regions and get it invested.
Well, I think one figure I picked out from his speech, he's talked about 600 billion over the next 5 years on additional infrastructure spending, road and rail. Rail, obviously, we know they're going ahead with HS2 and they're going to do a bit part of Northern Powerhouse Rail, but 27 billion on roads, including fixing 50 million potholes. So that's quite. We don't, at the time of this podcast, know how much of that money's coming to Cumbria.
Where the potholes are, do you?
Where the potholes. We know where the potholes. There's even potholes on the M6 now. I was driving down the M6 the other day to negotiate potholes
around which potholes they're going to fill in.
I did see that the A66 was included in that, though. Fortunately, in the government documentation, we're talking about finally duelling the A66. Which other section they're going to do, who knows?
It's the Penrith to Scotch Corner bit, I think, that's been in the offing, not west of Penrith.
They keep doing bits of it. That's the issue.
Well, they keep. No, I think that's just repairs at the moment, but there is this plan to duel it. So hopefully that.
Well, it's mentioned again in his document.
Yeah, and there's 12 billion for affordable homes as well, because that's an issue in parts of Cumbria in particular, isn't it? And another Cumbrian one is doubling expenditure on flood defences to I think 5.2 billion over 6 years. So we'd hope to get a share of that as well, I would think.
And I think it's going to be really interesting, Julian, to see how that pans out, because as we know, we did a lot of work before the government changed on looking at flood defences around coastal flooding, for example. And it's going to be interesting to see from a business perspective, because prior to us getting involved, they weren't registered, and coastal flooding would affect businesses rather bizarrely. That's been registered now, and it's going to be really interesting to see if there's a recognition of more spend on flood defences, whether that takes into account coastal as well.
Business needs rather than that's true. There was also money for. You seem to hear the money, but you never seem to see it. But there's money for.
That's the art of being a chancellor.
Improvement in broadband and 95% of the UK to get 4G coverage.
This is the
we haven't got 3G in some places.
This is the black hole of public spending, isn't it? I mean, you've got to be honest. These sound like big numbers when you're putting infrastructure like we're talking about broadband and the investment in it. It's turk-hurling numbers. And the problem is that because of the state aid rules around it usually stops it getting to the places where we really need it. That is going to be the real challenge. That said, let's not look the proverbial gift horse in the mouth. These are proper figures, and they're some of the things that we've been pushing for, particularly around the nut spots for mobile, which really hit us in Cumbria. So let's be fair. And the gigabit broadband, interesting, but I think most of us would prefer good 4G everywhere, which means you can take your business with you on your mobile device, and that means a lot to a lot of small, more dynamic businesses now than as done previously.
Okay, gents. Before we wound up, anything you were expecting to see in the budget that he hasn't? He didn't mention. He didn't deliver on.
Well, like I said, there was a few areas of tax where I would have expected him to have talked a little bit more. Inheritance tax, in particular, John Stevenson, the local MP here, had headed up a committee on inheritance tax, and it looked at getting rid of agricultural property relief and business property relief. I expected to see the consultation announced today on that. Hasn't been. I suspect we'll see something over the summer, but that would be a huge change for this region where we've got a heavy agricultural sector. If they were to get rid of a relief like that and replace it with what's suggested, which is just simply paying the tax, albeit maybe a lower rate of tax, but certainly paying some tax over a 10-year period, I think that would be quite a major change, and certainly something we'll be interested in seeing whether they're going to progress that or not.
And I would love to have seen the proposals before coronavirus came in. It'd be
Yes,
fascinating to see what this budget
would have looked like.
Or even Flip Hammond's leaked one. Looking at where that was, so there is a challenge here for the government. Is they've got to get the message out that they're bringing change. I guess my disappointment is a lot of this is still fairly nebulous. It always is on a budget. The detail will come out when we go through the documents that support it. And I think what it's done is it's a mitigation on the impact of business for coronavirus, and the real, I guess, if we get through it over the summer, the real tell is going to be any autumn statement or autumn budget, where they really want to be with that, and picks up on the taxes issue, I think.
And the other thing that was interesting was we didn't hear much about Brexit, which is what you probably would have been hearing about.
I think it's a banned word, isn't it?
That's right. We're coming to the end of the transitional period at the end of December, and we didn't hear a lot about what is going to happen and how he's going to encourage businesses. Now, I suspect we'll hear more about that again as we go towards the presumably some form of autumn budget. But this transitional period is rumbling along, and now it's been superseded clearly by this emergency.
Yeah. Okay. Well, thanks very much, gentlemen, for your very quick and considered, because we're recording this just barely an hour after the Chancellor sat down, so it's pretty good going. Thanks very much for your time.
Thanks, Julian.
Thanks, Julian.
Thank you for listening to the Cumbria Chamber of Commerce podcast. You can find out more about how we're supporting Cumbrian businesses at cumbriachamber.co.uk and cumbriagrowthhub.co.uk. In the meantime, thank you very much for listening, and watch out for the next episode, which we'll be releasing very soon.